By 2030, as a planet, we are supposed to achieve the 17 SDGs. The SDG related to this issue is SDG 8, Decent Work and Economic Growth. SDG 8 aims to promote sustained, inclusive, and sustainable economic growth, full and productive employment, and decent work for all. Who is responsible for achieving this SDG? It is our responsibility to achieve this SDG. There are various ways everyone can contribute to help come one step closer to achieving SDG 8. By the end of this video, we aim for you to find out 1. What is the issue? 2. Whom does it affect? C. Who is working on solving it and how? And D. What can we as a youth help to do solve this issue? Our topic is measures to resolve the issue of economic decline due to the 2008 crash. The Middle School Model United Nations in Qatar is an opportunity for middle school students to learn about the most severe global issues and work as UN delegates to answer those problems. Middle School MUN was launched by the Hague International Model United Nations Qatar to facilitate more debate and discussion amongst middle schoolers. Who is affected most by this issue? Due to the 2008 crash, the economic decline negatively affected countries which were still developing, like Ukraine, Jamaica, Ghana, Kazakhstan, Mexico, etc. Since the end of 2008, developing countries have begun to feel the financial and economic crisis's full effect. Initially, banks and other financial institutions in most developing countries seemed to be half shielded from the financial crisis due to their limited exposure to the financial instruments that lay at its core. Since then, however, it has become clear that their domestic capital markets and their access to international capital markets are being affected directly and significantly. Because of the 2008 economic crisis, the world economy entered the deepest and most synchronized recession in generations, caused by a global financial crisis and deepened by a world trade collapse. The credit crunch had limited the availability of finance for trade and infrastructure investment. Moreover, lower commodity prices have diminished the returns from trade in some developing countries and reduced private sector involvement incentives. What are the root causes of this issue? The Wall Street crash of 2008 was the major cause of this issue. The stock market crash of 2008 was a result of defaults on consolidated mortgage backed securities. Subprime housing loans most comprised MBS. Banks offered these loans to almost everyone, even those who weren't credit worthy. When the housing market fell, many homeowners defaulted on their loans. These defaults resounded all over the financial security, which heavily invested in MBS. Consequently, companies doing business with these banks were negatively affected, and this pummeled their stocks in turn. Social issues. Vague stagnation and rising inequalities common led to lower aggregate demand, reducing consumption, but this was offset by financial innovations, facilitating access to borrowing and supposedly reducing risks while making it easier for those with high amounts of capital to make high gain investments, the assets of financial bubbles. To make it possible for a general increase in inequality and the possibility for the finance to spread as extensively as it did, an ideological shift was required to reduce the amount of government control in running the economy. This ideology is widely known as neoliberalism. Economic causes. The financial crisis was primarily caused by deregulation in the financial industry that permitted banks to engage in hedge fund trading with derivatives. Banks then demanded more mortgages to support the profitable sale of these derivatives. This created the financial crisis that led to the Great Recession. Housing loans and mortgages. Conventional wisdom holds that the housing industry collapsed because lenders of subprime mortgages had preserved incentives to bundle and pass off risky mortgage backed securities to other investors to profit from high origination fees. The logic follows that banks did not care if they loaned to borrowers who were not likely to default since the banks did not intend to hold on to the mortgage or financial products they created for very long. Impact of the issue. These are the economic, social, and long term effects of the 2008 financial crisis. Why should we care about this issue? The financial crisis has caused the euro's value to plummet, making it harder for the US and other nations to boost their economies through exports. The dramatic fall in the value of its currency thus has significant implications. If one or more of the high indebted nations defaults, it may well trigger another banking crisis worldwide. The impact of the crisis in each country depends on the type of recession, the situation before the recession, the measures adopted by the state and the government in response to the crisis, and the role of communities and family structure in individual lives. Who is working on resolving the issue and how are they doing this? The International Monetary Fund is encouraging countries to do what they can do to make themselves less vulnerable to crisis, such as keeping government borrowing under control, guarding against inflation, avoiding unsustainable exchange rate arrangements, managing debt responsibly, and strengthening domestic financial systems. To achieve this, the fund is stepping up its regular scrutiny of member countries' policies, carrying out assessments of nation financial systems in cooperation with the World Bank, and also providing precautionary credit lines to countries that undertake crisis prevention measures but which nonetheless still feel vulnerable. What can we do to help contribute to resolve this issue? Nevertheless, crises will still occur. Furthermore, official institutions will not have the resources to bear the full burden of covering a country's financing needs when they do. Neither would it be desirable for them to do so. Therefore, it is essential to encourage private sector creditors' involvement in the resolution of crises by reaching collaborative solutions to payment problems. If efforts to reach agreement on a voluntary approach are not successful, creditors may have to accept some constraint on their intermediate demands for repayment and shoulder some losses. The big question is, how does this issue affect us as an individual? Any financial crisis is bound to have an appealing effect on individuals, irrespective of whether they were involved or not. The 2008 financial crisis made people lose their jobs, abandon their homes, be in severe debts, etc. There were many people who could not afford basic amenities and had a major setback in their lives. It took them years to come back to their normal lives and could not even do that. The 2008 financial crisis was a responsible factor for the increase in the cost of many products. Sign up for our conference MSMUN 2020-21. Thank you so much.